This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Interest rates on a real inflation-adjusted basis are going to continue to trend lower. You can see this reflected in the shares of the TIP ETF, which bottomed out at around 108 in November of 2018. What happened in November of 2018? That's when the Fed had to suddenly reverse course. 10-year note got to 3.25%, and everything started to seize up. The stock market crashed in December of 2018, and I think you know the rest of the story. That's when I caught on, wrote 2010 plus 9 in January of 2019, saying this was going to be a year we're going to break out. We did. We knew that trend would continue this year. It has. And it's going to continue next year as well. I don't care where you want to draw the trend line here. But even the last, 8-10 weeks of going sideways in real rates, the trend is still up. And there have been other periods of sideways. Notice last year at this time, keep talking about how gold went sideways and consolidated for 90 days. So did real rates. The entire fourth quarter, they were sideways. And then, once they took off again, that's when gold took off. And then they went sideways in the second quarter of this year, and gold went sideways. And then they took off again, and gold took off. And now here we are sideways again. Man, this trend is unbroken, and real rates will continue to fall. And that's what's going to drive gold ever higher in the weeks and months ahead. And you know, with these policy changes, and once we get the election behind us, and the trillions in new spending, and the yield curve control, and the debt monetization, and the pending stagflation, you know it's coming. Okay? It's all part of that big picture I keep trying to remind you of. So I thought this was a good way to illustrate it. But again, we don't know when it's going to start. We've been watching these pennants closely, and I think this is utterly remarkable. Now, we closed today at 1910. When I printed this chart, we were closer to 1912. But notice, as I drew it here, which I think is the most accurate way to draw it, because the red band catches starts at that bounce back peak to 2020, that catches 1, 2, 3, at least 3 points, comes very close to catching 6 or 7. The blue one starts on September 28th and then catches that low on the 14th. That's the fallback from that other peak at 1940. So I think that's the right line as well. If you don't draw your lines there, then you're just simply moving the goalposts, and the whole exercise becomes useless. So I think these are the right lines. And if I'm right, look where price ends up. Obviously, the pennant closes today. And when I printed this chart, where price was at 1912 was precisely in the middle. So we'll see. Maybe, like I said this morning, I'm just a dope with a MacBook that draws funny lines on charts. And I should just get myself some coloring books and walk quietly off into the night. But maybe this is something. I guess we'll know tomorrow. If we continue just to go sideways or drift a little bit higher or lower, then, well, okay. My little pennant means nothing. But if we explode higher tomorrow or break down sharply lower tomorrow, won't that be interesting? I can't wait to see. All right, here's your gold chart. Again, look at these. Look at those blue lines, the pennants. Do you know? Now, look, I draw them to catch as many points as possible. All right. No, if you just try to move it to the farthest down tail, then you're just always going to be moving the goalposts, right? And I have proven time and again that, to me at least, this is the right way to do it. Well, guess what? I didn't do it on purpose. Those two pennant lines, the blue ones, are perfectly parallel. When I drew them both and then I moved one and went, damn, they look parallel. They are perfectly parallel. So again, why was today's drop not as bad? Well, the one from the first pennant broke through the 50-day. And that's how we ended up falling, almost $75 in a day versus today being $45? Yeah. And you won't get the follow-on selling, I don't think, like we got in the 2 days that followed back in September. Oh, maybe a little more stretch down tonight. sometime during the Asia session or something like that. But I think we begin to hold and recover here, make a higher low versus September. Eventually, then after the election, tackle this trend line again, and it'll be in the area 1900 by next week. We'll get above it finally. We'll tackle the 50-day again. And it's sometime in the next couple of weeks, we'll be back over 1920 on a weekly closing basis. And that'll set up the stage for how we'll finish the year. Here's that bull I was telling you about. I'm saving this chart. I would encourage you to save this chart. Print this chart. I think this is going to be very valuable. And we are going to, you just slide the whole thing over 3 months, right? Take May, June, and July off. Slide the whole thing over 3 months, and you'll have November, December, and January. And by sometime in January, if I'm right about this bull that's forming, we'll be back up to those highs, 2060, 2080. And then we'll dick around, put a little cup and handle and all that kind of stuff on. And then with another stimulus deal that'll be coming. Now, I'm not talking about the one they're going to do in the lame duck session. I'm talking about another one in the first quarter to fight off all the corporate failures and everything else that's coming. Anyway, then we'll blast to new all-time highs. But then again, now I'm getting way ahead of myself. All right, so then finally, your monthly chart of gold. What do you think about this? I know I've drawn this before you several times. I thought I would give it to you again. Now, if you look close, you can see we had a red candle for the month. That's 3 red candles in a row. But still, not all the way back down from the big green candle that we put on in July. So we're breaking out above what were the old monthly highs from way back there in August of 2011. This is a level you're going to want to watch next week because of this. That monthly close, all-time high monthly close prior to July of this year, was about 1830. I think 1828, something like that. If they do come after us next week, let's say the dollar spikes, the bond market melts down, there's all this market craziness. In intra-week somewhere, they're able to make a new low on the gold chart. I don't think they will, and I feel pretty good, especially after the way we rallied today, and we're a good $30 off those lows. But if they somehow come get us, do not be surprised that there's a level of support there. Around, like I said, 1830. And oh, by the way, on this monthly chart, this should give you encouragement. If you know anything about technical analysis or you like to draw your own charts, that's a pretty good cup and handle, wouldn't you say? Another reason why, maybe we will come down there and tap that 1830 level just to complete the whole handle. But then you know what happens once the handle's completed, don't you? Yeah, again, kind of explaining to you why I'm so optimistic for new all-time highs as soon as the first quarter of next year.